Hi, I'm Mr. Simons, and in this video we're going to continue with our walkthrough of the 2017 Economics HSC, and we're going to start looking at question 23. So let's go. Okay, here we are at question 23, and part A, another distinguished question worth 2 marks. So it stands to reason if I can explain both of them pretty well, at least distinguish between them, I can get those 2 marks. So it says distinguish between income and wealth. So the idea here is that income is just the returns we get from the factors of production. So we do something and we get a return. So we provide our wages, we provide our labor and we get wages. We provide the land, we get rent in return. But wealth is different. So wealth is the value of the assets that an individual holds at a point in time. So it's not the returns from providing the factors of production, it's the value of the assets. So things like shares, property, fancy vintage cars. It's the value of those combined level of assets. So hopefully that's helpful in distinguishing between income and wealth. Let's move on to part B. Part B reads, explain, it's our directive term, 2 ways in which taxation can be used to change the Gini coefficient from 0.5 to 0.2. So we really need to think about, okay, so we need 2 ways in which taxation, no other elements, we just want to know about taxation, can be used to change the Gini coefficient from 0.5 to 0.2. So the first thing we have to understand is what is happening to income and wealth inequality in an economy. So we know that a Gini coefficient of 0 is more equal, 1 is less equal. So if the Gini is going from 0.5 to 0.2, income and wealth distribution is becoming more equal. So what we have to do now is think about, well, how can we use taxation to make things more equal? And there are 2 possible courses of action. So there are 2 possible strategies to make income wealth distribution more equal in an economy. One thing is you want to increase the tax on high income earners or reduce the tax on low income earners. That will help everyone come back to the middle. So if we're going to increase tax, what are the kind of things we could do? So to increase the tax on the wealthy, we could do a couple of things. We could increase the top marginal tax rate because that's going to affect the highest income earners. The other thing we could do is we could increase wealth taxes, taxes on owning assets. So something like capital gains tax when you sell assets. That's likely to affect high income earners more because they probably own more assets. The other thing you could think about, and you may or may not agree with this, which is fine, is you could increase company tax rates. And the idea here is that wealthy people are more likely to either own companies or to have shares in companies. So if you increase the tax rates on companies, they will record less profit. So therefore less returns will flow through to wealthy people, which will help to even up income distribution. Now you may or may not agree with that last point, that's fine. The first 2 should give you sufficient things to talk about. So let's flip to the other side. Let's think about how could we reduce taxes on low income earners? If we're looking at the low income earners side, if we increase the tax-free threshold, try saying that 3 times quickly, which is the amount you have to earn before you start paying tax, then that will reduce the amount of tax that low income earners pay. Like if you increase the tax-free threshold to $25,000, that's going to give a lot of low income earners more disposable income and help even up that inequality. The other thing you could think about is that The GST is a regressive tax, so that low-income earners pay a greater proportion of their income in GST. If you reduce the rate of GST, they will pay less tax proportionally, have more disposable income. That could even things up as well. So both of these sides can give you plenty of points to talk about. Okay, here we are at question 23, part C. Explain how age and gender affect wealth inequality in Australia. So it's very specific about wealth inequality. So this is a very important distinction because this means what they're looking for is that how do these variables affect the ability to do this? So our focus needs to be on this. So let's tackle each of these in turn. Why don't we start with age? Young people have less skills and experience in the workforce. They have to, they've just had less time there than other people. So they have a lower earning potential. They got a lower earning potential, then they've got less funds to buy assets or build wealth. Younger Australians typically will be on the lower end of the wealth spectrum than other Australians. Of course, there will be exceptions, but this is generally the relationship. Now let's look at gender. Women have typically, historically, yes, things have changed over time, and this isn't the case for everybody, that they've typically and historically taken leave from the workforce to raise children. So this means that there are sort of gaps in what they're earning, that they would be earning full-time wages and working full-time and earning those skills and building up their ability to earn more and build wealth. But when they're not working full-time or they're working part-time or they're not in the workforce at all, then they could have less earning capacity compared to men. Well, that would reduce their ability to build up higher incomes that could then be used to buy assets and build wealth. Now, you may not agree with all of this logic, but this is one way of trying to address the kind of theory that is being examined in this type of question. Okay, so this wraps up our look at question 23 of the 2017 Economics HSC. Make sure you come back for question 24. You won't be disappointed. Subscribe so you don't miss out. Have a look at some of the other walkthrough videos. And as always, thanks for watching.